This morning. In the previous session, we saw there was a discussion mostly on the interlinkages between financial inclusion and specifically on digital financial inclusion infrastructure and fintech and how that can be leveraged or not for improving pension coverage and inclusion. In this session, we have a great panel of an incredible resource of senior people who have been battling in the trenches on the questions that are fundamental to this conference, which is how do you actually get past the formal sector salaried workforce, which is traditionally included in pension arrangements in most countries, and how do you actually get to the 90% or thereabouts of the workforce, which in most of the countries that are on this panel are excluded or have been traditionally excluded by virtue of their incomes, by virtue of their occupations, and by virtue of where they live and how they work. So the good thing is that I think that on this panel we have a lot of, most of the people have been making efforts in this area, have been thinking quite actively in this area, and have been actively engaged within their country at a policy level, are making regulations and are setting up systems and infrastructure to achieve pension inclusion. So very quickly, let me just introduce in the order in which the names are printed in the agenda. I have Darren Ryder, who's the Director Automatic Enrolment in the Pension Regulator at the UK. Darren, before that, was with in New Zealand, where he was doing, again, something completely fascinating, and he's going to tell us a little more about what he does currently in the UK. Then we have David Tuista, who's, I'm sure all of you know David. He's with BBVA, and again, like Darren, he's an author for the book, and he's done the chapter on Mexico. And then we have David Bonnier here, who's the CEO of the Retirement Benefits Authority at Uganda. Before that, I think he was in the regulator's office at Kenya. So again, has a lot of experience in East Africa on the regulation side. The current CEO of the Retirement Benefit Authority at Kenya is Nzumo Mutuku, and he's here with us to share his experience on what the RBA is doing and how they're thinking about this. We have Governor Denton Rarawa, who's the governor of the Central Bank of Solomon Islands. And it's a pleasure, sir, to have you here with us. Thank you for joining us, and who's also a co-author on this chapter on pension inclusion in the Pacific Islands with Krishnan from UNCDF. We have Javier Brofman, who's done the chapter on Chile, and we have Kamer Özdemir, who's with the World Bank and has been involved with the pension reform work in Turkey. So we have 7 countries here. And unlike in the previous session where we were looking at pensions largely from a fintech / financial inclusion perspective, I think we'll get a slightly different view on how these countries have been working on this particular area. So I think let's start with requesting Darren to tell us a little more about his experience in this area in the UK in getting enrollment of people going beyond the larger firms. In general terms, the way we'll structure the session is that we will have about, say, 5-6 minutes of initial comments from the panel, and if there is any discussion or comments on the feedback that we have on the panelists here. We'd like to encourage greater participation from all of you, because I think there is an equal amount of wisdom and knowledge across this room, and it'd be lovely to get your feedback. Please do remember that we have these 6 extremely enthusiastic lights in our eyes, and we can't really make out who is raising a hand. So if we somehow tend to not notice that you're wanting to ask a question, there are going to be people here with mics, so please stand up, make some noise, and we'll make sure that we actually come to you for a question. So let's get started. We have about an hour and a half. So Darren, over to you.
Okay, thanks, Gautam. As Will mentioned in his opening address around the Central Mission Office, I was lucky to contribute to a chapter around the role of the Mission Office, and partly that's because over the last sort of decade, really, I've been involved in the implementation of KiwiSaver in New Zealand. So we set up a central, what we would deem program office, but mission office in other areas, and latterly in the UK, set up of the automatic enrolment process of automatically enrolling people into workplace pensions. So, as he mentioned, it's more and more important for reformers to think of wider issues than just the policy side of things. We do really need to turn our attention through that formulation side to the whole implementation. And it's always pleasing that policy and legislation is written so easily that we can implement it so simply. Or maybe I'm lying a little bit on that front. It is a challenge, and obviously the earlier the operational side or the implementation or mission office, whatever you want to call it, works with policymakers and legislators, the better. It just makes it so much easier when it comes to implementing the rollout of a program. So I will just, we only have 5 or 6 minutes, just share some of the main things from my perspective. It is important to think through when you are starting to look to implement the reforms based on the experiences I've had in both those countries, really. So first one really is around ownership. It's interesting to work through, when you're looking at setting up a central mission office, who from a government perspective should sort of own the responsibility for rolling that program out. In the New Zealand model, we had it centralised within the New Zealand tax office. The risk of that is obviously it can be seen as a tax. There was talk that KiwiSaver is just another tax. So we had to very carefully make sure that it's, perceived that it's not a tax, it's seen separate. We branded KiwiSaver quite separately, through to having its own portal, websites, all things like that. So it was, yes, it was under the umbrella of the tax office, but they were really only there to pay our wages, and we really needed to make the identity of KiwiSaver quite separate. But as an ownership, best place for it, because they had a very strong relationship with employers. And the approach that we were implementing was everything was run through the PAYE system, the pay-as-you-earn system, through the tax system, contributions flowing through to the scheme. So quite a relevant place to put it. UK, slightly different. We've had the ownership under the pensions regulator, which comes under the Department of Work and Pensions. And it has been a little bit more challenging because it's a new piece of work for the regulator. We're now engaging with employers, which in the past we never really had those relationships with employers, and or certain parts of the industry we didn't have those relationships with, so we had to form that. What it has done for the pensions regulator, though, in the UK has really helped the identity of the regulator across the nation. So it's built up the brand and identity of the UK pensions regulator, where in the past people did not even really know on the street who the pensions regulator was. So it certainly had benefits there. As I'd say though, it is important just to really think who is the best organisation to own the responsibility of the rollout program. You then move into things such as business case. Of course, they're a difficult thing to do. Obviously, the main important thing is to secure the funding. One of our key learnings in both countries has been making sure you secure funding for post-implementation. So you're always going to roll out a program that will need some change once it's rolled out. It will need certain areas fixed, improved, enhanced, and or there will be other legislative change come along. So it is important in that business case to secure funding for post-implementation. It's always quite common with operational rollout programs where we just secure the funding for getting it out with an end date in mind, not securing some funding for additional improvements going forward. So that was one key factor that we learnt and we did factor in. Likewise, sponsorship is a really important one too, and that is actually at the government level. It was probably easier for us in New Zealand because we had the Minister of Finance was our main sponsor at that ministerial level, so easier, closer to the purse strings, and did make our rollout a lot more simpler working and navigating through the government system. Other areas that will need to be attention paid to in the rollout will be around engagement, and that is across the industry. So, we put a lot of effort into stakeholder engagement, working with various professional bodies, trade unions, through to the pension scheme providers and the payroll industry. We were very reliant in both countries around payroll systems to be adjusted to account for the pension contribution and the payment flow through to various pension schemes. So we had to work very intensely with those payroll developers to improve their software and roll it out at hopefully no extra cost to employers, because we don't want that additional burden and cost being passed on. The UK, one thing we did find out quite early was we needed to pay a bit more attention to the environment that was happening around us, so what other policy reforms were happening at the same time as rolling out. So again, when thinking through policy reform, you need to keep an eye on some of the other things that were happening across the country. So the UK, there was a massive change in the tax system around what we call real-time information. They were rolling out a compulsory requirement for all employers to move to digital to start filing all their pay-as-you-earn wage contributions through to the tax office. That caused us quite a major problem because the payroll developers were too busy developing the software to do the PAYE side of things, and actually pensions was a way down lower on their list of priorities. So it took us quite some time to finally convince them to move that priority up and include the pension side of things. And it was important, of course, to have the software systems to do this, because you have less error occurring and less risk of non-compliance through automated systems. Other areas we paid a lot of attention to were around research and testing. So the Central Mission Office does give you a good opportunity to test things along the way. So we've been doing a lot around behavioural science type techniques and introduced quite a nudge process into how we communicate with the employers who were the responsible people to roll this program out with their workers. So nudge them along the way at least a year before they actually had a duty to do something, so they had an understanding what would need to be done when at each stage. So by a certain time you should go out and get a pension scheme for your workers. At a certain time you should start to work out in your workforce who is eligible to be enrolled. Then at another certain time you should enrol those workers. So we just nudge them along the way slowly, not just sort of one message then expect you to do it. And that certainly paid benefits. The research we did tracking their awareness and understandings of what was required of the employers throughout the period has certainly paid dividends, because we are seeing very high compliance rates in the 95% of employers have undertaken the duties, they have enrolled their workforces, and they are contributing to those schemes. Difficult one to navigate, especially with government, is around communication campaigns. TV and radio by far have been our biggest reach mechanisms to make people aware of what's required, but both in New Zealand and the UK, government's reasonably reluctant to spend money, especially on TV campaigns, but it is an area that certainly pays dividends and does reach the people through to make sure they understand what's happening. You do go through a series of why is this change necessary, and then you need to soon move into the how do we go about it, so that those required to do it actually know how to go about it. Then just turning on to the mission office itself, we undertook, well, externally there was a couple of reviews of our mission office setups, and one of the key things in that that was found from the likes of the national audit offices of the world would say that it's important to get the right personnel into a central mission office, and that will be a combination of skill sets from policy to communication experts to people that really understand customer operations, right through to compliance techniques, how to undertake a compliance regime for those that don't comply, into the IT systems, expertise around that. Just depends on really the role of that central mission office. And another one is really around retention. Both mission offices I've been involved in, we had high retention of staff. They really believed in what was being rolled out. We were proud of what we were doing for the countries, and it was paid benefits by retaining a lot of the key personnel through that whole delivery phase. So how's it been working in New Zealand and the UK? I have a slide here which I do know Will Price loves to bits. I shouldn't really point out where it was dipping as when he left the UK, it really just illustrates that over years the participation into workplace pensions was declining. And in 2012 in the UK we brought in automatic enrolment, where employers had to go out, obtain a scheme, had to automatically enrol their workers into a scheme, and then if staff didn't want to stay in the scheme, they had an option to opt out. So we moved from about 55% participation rate right up to around 76% to date. And we have over 8 million already enrolled, and we're halfway through the employers enrolling this program out over a 5-year program. It is taking a few years to roll out, but it's mainly been due to scale. We have to balance the ability for the market to accept all these members, all these employers. There's roughly 1.5 million employers in the UK, so we've got about 600,000 to go. So we expect we will be hitting up around the 10 million new savers moving into saving for their retirement, which is very positive and excellent for the UK. New Zealand, smaller country, smaller scale. We did Big Bang over there and achieved roughly 2.5 million members are now enrolled into KiwiSaver schemes across a population of 4.5. The interesting thing in the New Zealand model is there's no age restrictions, so a lot of parents have enrolled their children, grandparents have enrolled their grandkids, mainly because the government was quite generous in the day by putting contributions in for a start-up, and under the age of 18 there was approximately a third of the population were enrolled. So New Zealand, that sets it up really well for those savers in the future. Finally, challenges though, we still do recognise in the UK we have got a number of challenges to go. One's contribution levels, it's quite low right now. Over the next year, or next 2 years we're phasing that up. Next year it will increase to 5% contribution rates going in, the following year up to 8%. A lot of debate on is that the right levels, who knows. My worry is, will we retain the members? We need to retain the members in as those contributions go up. So we will be doing some strong education type programs to really raise the importance that you need to stay in saving for the long run, and hopefully encourage more saving over time. Coverage is starting to become a problem with different working patterns. We are seeing more and more people with multiple jobs, and because we have income thresholds in the UK where you don't have to be enrolled, those people with multiple jobs aren't falling in to the automated enrolment cycle. So that's becoming a worrying sign, along with the self-employed and the gig type economies. So we need to get better definitions around who is an employer and how can we capture some of those areas or those parts of the market that aren't being captured now. Then finally, engagement. We know engagement into pensions at an individual membership level is what you could almost say is woeful. People just aren't engaging, paying attention. We know in the UK on average people are having about 11, 12 different jobs throughout their life cycle, and that is increasing with new generations coming through. That does mean in the UK, given it's an employer chosen scheme, they will have multiple pots. So people do need to start to look at how they can get visibility of those multiple pots. And one area we're starting to explore is some form of a dashboard type approach where it will show not only your individual savings at a personal pension scheme, but your state savings, everything there to show what you will have in the future. So, what I will say is, from a rolling out implementation phase, the most important bit is getting policy and operations together as soon as possible, and a central mission office plays a critical role in the success of rollout of pensions reform.
Thanks, Dan. And I think that is indeed, so that the mission office idea, I think, is something that can, my sense is that all the countries on this panel is an idea that they could, very well adopt. And we've done that. I mean, with your co-author, Alok Pandey, did that in India on the banking side with a similar mission office. The second, I think, is what you did, which is again interesting, is at the behavioral level, which is the opt-out part rather than the opt-in. And I think a combination of these two with a focused effort by your team and you did give us the kind of outcomes that you've actually managed to get. So now let's turn to David Tuista and request David to give us, what is his sense of the, let's say, the most important aspects of the challenges and solutions, and what does he think are the, say, 2 or 3 key messages for other countries in this area, both from your learnings on things that have worked and things that maybe have not worked very well.
Thank you very much, Gautam. Thank you for the invitation. First of all, most of the issues that I'm going to discuss in the following minutes are based on the chapter that you have in the book, Developing Digital Pension, Pension Inclusion in Mexico. This chapter was written with my colleague Carmen Hoyo, who is sitting over there. And, well, I think that what is happening in Mexico, I'm going to just to share with you the Mexican experience. I think it's a good picture of what is happening in the region, specifically in Latin America. The main problem is the very low level of participation in the pension system. Actually, or currently, around 40% of the economic active population is actively saving in the mandatory pension system. So at the end, you have a 60% of workers who are not going to have any benefits, pensions, when they get retired. This is one issue. The other issue is that those who are participating in the system are not saving enough, and you have 2 main explanations of these situations. First is the lower level of mandatory contribution, that is 6.5%. That is very low in comparison to other countries in Latin America. And also, this is the issue of a low frequency of participation, of contributing during the whole working career. Usually, workers contribute more or less 40% of their entire career. So at the end, the level of replacement rate that they got at the end when they get retired are pretty low and diminishing, considering all the global transformation, for example, the increasing life expectancy and other relevant factors. So the issue to increase participation in pension savings, it's really a key element that is difficult to tackle, because behind all these results is there are problems in the labor market. There are market failures, clearly market failures, that is reflected in the high levels of informal economy. Around 50% of the pension of the labor market in Mexico is informal. And what's happening is that you have, for example, from a period from 2007 through 2016, that 24% of the workers, of the economic active population, has been working both in the informal sector and in the informal and formal sector. So there is switching from both sides. During the same period, more or less 70% of the formal workers switched to the formal workers switched to the informal workers, and 70% more or less, maybe a little less, from the informal to the formal. So you have what we see in this situation is difficult for any traditional pension scheme to tackle this problem of low participation in saving for retirement. So the issue here is how to approach with new ways, with new ideas to increase pension inclusion in Mexico. So I don't know if we can. I have the next slide, please. This is the same chart that you have in the chapter in the book. This is the way how we approach to discuss this issue of pension inclusion for the case of Mexico. We want to increase these savings, more savings for retirement. Thank you. And we see the process of pension inclusion like as the process of increasing the usage of pension saving products, the increase of access, and at the same time reducing the obstacles or barriers that are limiting the possibility that people participate in the system, okay? In order to do that, you have many enabling factors or determinants that could help to overcome these barriers, okay? These structural barriers, like informal economy, as I mentioned before, and you have other barriers that there are surveys where we can see the perception of people about the financial system, specifically to pension saving products, and people say that they don't save because they see they don't trust the financial institutions, or they see that the products are too expensive, the fees that are charging by some of the pension companies are higher, or probably they have some documentary requirements that they cannot they cannot face in order to interact with the financial system. So, but you have these enabling factors, and in the chapter, in the book, we focus basically in the role of digital transformation, technology basically, the use of data, the use of platforms, the use of artificial intelligence, and how this combined with the digital the digital achievement that Mexico currently has in order to offer new solution for the whole population. And also we focus in this aspect of government commitment or the commitment of the national regulators in the case of Mexico. I think that both aspects are relevant in order to try to fix or to tackle this enormous challenge that we have. So I think I can choose this. We presented in the chapter some indicators about how Mexico is performing in this digital transformation. We have many charts. I'm going to focus in this one. Sorry. This is an index that we construct. This is a composite index that takes into account different aspects of digital transformation, basically 6 components. We consider how the country has developed infrastructure for using digital solutions. We talk about how individuals and firms use technology. We talk about the regulatory context for digital solutions also, and digital contents, and also how expensive is to access to different digital tools. And in the case of Mexico, we see that it's in the second in the second quartile, in the second lower quartile of a sample of 90 countries. More or less has the same level of digital development like Morocco or Thailand, and very far from countries like the US, that is that you can see in the chart, or Northern European countries like Finland and Sweden. So you have here enormous potential, okay, for Mexico, but notwithstanding this that Mexico is in the early stages of from a comparative point of view with other countries in this digital transformation, there are some variables that provide some room for developing digital solutions for pension inclusion. One that is, I think, well known is the penetration of cell phones in the country. That is practically a penetration of 100%, very similar like many developed economies. So I think that this issue has been observed by the governments and regulators, and currently are facilitating different solutions that we are going to mention just in this slide. Okay, so in the chapter we perform some statistical approaches in order to see how relevant is to have a cell phone in order to increase pension participating. I mean, what is the likelihood to increase pension saving if people have a cell phone? And we found a positive and significant effect about the use of cell phones for increasing financial pension inclusion. This is not, we are not, in this case, we are not talking about causation. We're talking basically about correlation among these factors, and we have to take these results as early findings of potential of continuous developing digital solution for increasing pension retirement. But we have to take also into account other factors that are necessary to tackle, like, for example, the problems with gender gap that we also find clearly disadvantaged in the case of Mexico. Being male increase the likelihood to increase pension savings. So we need to define, or government need to define, what are the best approach in order to solve this problem. We also find other aspects related to the level of education. Young people really are not interested in savings for retirement, so what is the right products or the right incentives in order to incorporate these collectives to participate in the pension system? And also something curious that was mentioned in the previous session is the role of having a house, to being a property owner. What we found is that has a negative effect for savings. And what happens is that people prefer to have something tangible, to have their houses, and also they see a house as a way of saving also for retirement. So probably the issue is to try also to find products that could match both aspects, no? The goal to have a house, but at the same time, how to, for example, to decumulate in the future this house in order to have a flow of benefit when you get retired. But this has some ideas here. And finally, what we find is that the national regulator of pension, the CONSAR, is currently working in this area of trying to use